Good morning. I hope everybody had a great Christmas. Trading was not that good, but that's what you'd expect. And we'll talk about the past couple days also, because it's good to be able to watch that. I see there's a lot of people that are not here today. And everybody should know that, a day like this, like it's been the past few days, are probably not going to be ideal trading days. But I figured I'd open up the room today and tomorrow, at least for a couple hours, just to see what we have and talk a little bit about it, because it's good to be able to see these differences and understand why it's not a good trading day today. They're trades they set up. I mean, it's not, not untradeable, but there's a lot of things that would say stay out of the market. Who's user? Somebody's logged in as user. I'd just like to know who's in the room. Can you type in your name below or possibly change that? It's pretty easy to change. There's just a place up at the top where you can click File and Preferences and just put your first name and an initial in, or your first and last name, anything like that, just to let me know who you are. Oh, hey, Ron. How you doing? Okay, good. Good. Good morning. Good morning, Lewis. Very slow again, and we're going to look back. Let's talk a little bit about what's going on, and there's really no trades setting up. I mean, I'd be very cautious about anything. There's no horizontal resistance here. The blue line is after the open. Okay, so we don't have a trade there. Let's just take a look over the past few days, because these are the kind of things in real life trading. Whether you're trading for real this morning or whether you're sim trading, you have to be aware of what's going on. Okay, so the last day we traded was Tuesday, and Tuesday was not a good day. Okay, Monday was tradable, and let me just look at numbers-wise. I think Monday and Tuesday were not, numbers-wise, they weren't bad days, but trading-wise, well, Tuesday was not good. Christmas. I'm just making some notes so I have this. Okay, so this was Monday right in here, and Monday was a pretty normal day. Okay, it was actually a decent day, and you can see, and let me bring over the daily chart. So we can kind of compare and see the overall volume. Okay, so Monday the 22nd, right there. Okay, we had 164,000 contracts, which is definitely a light day. Okay, that's not a normal trading day. Usually we're around 220, 200, 2 to 300. 300 could be closer to higher. Some days we get up as high as 500 and 600. But typically, 160 I would consider a lower day, but tradable. Okay, then the next day we're down. That would be Christmas. No, day before, the 23rd. It wasn't even Christmas Eve. we were down to 140 some thousand contracts. Christmas Eve we were at 46,000, 61 on Friday. Okay, so completely untradeable on Friday, and Friday was a actual trading day, but not tradable. Okay, so let's look at the chart. This would have been Monday, and we had movement. Okay, it was pretty good. This 8 to 9 period was kind of slow in here, but we did have some trades. Now, overall for the day, I had 4 losers, 33 trades and 4 losers. One was a 5 tick. So it was a pretty good day as it turns out, but it's very light, and you just have to watch out if it gets too light. Okay, something to watch out for, but you can see the pattern. I mean, there's price failures, which is what we're looking for, and movement. Okay, now we go into Tuesday of last week. Okay, and pre-market is just nothing. Okay, nothing in pre-market. And then look at the movement as we start to hit the 3 a.m. Okay, look at it here. Well, let me shrink it up so you can see them side by side. Okay, and you see the difference. It's really not moving at all. And then we get that slight rise, and then this just erratic drop at the open. So something's going on right away. I mean, not a lot of movement, and then it starts to float up, and floating up means that there's no trading. We're not trading up, we're floating up. There's a difference. And then all of a sudden, boom, the bottom just drops out of it, and so Tuesday was just a bad day, and the volume was real light. No volume in here at all. I think I had a little thing on so everybody can see it. Look at the volume real early in the morning, 5 and 6 contracts. So nobody was trading overnight. And then pre-market, when the European markets opened, same thing. It was all single and double digits or double digits in through here. And, it just didn't do anything. I think we had a report here that wasn't even that big of a report, and that report pushed us up through the roof, and then again, another 2 reports here, but the bottom just dropped out even before that at the open. And the volume wasn't that heavy. Okay, there was just no buying or no trading. It was just a bunch of people just moving positions and waiting for the positions to get filled. And that's, that's the kind of movement you see. And then in the afternoon, it smoothed out a little bit. Okay, we got through that kind of run up, run down, and then I mean, even if you had just traded the afternoon, it was okay. You would have gotten beat up pretty good during that mid-morning session. But if you had started trading around 11 o'clock, you only had 2 losers through the afternoon, and there was a lot of trades there. It definitely turned itself around, but not really good enough to call it a good day. The dog says no also. Okay, so that was Tuesday. Okay, and we did have some movement, but like I said, it just kind of cleared up in the afternoon, and the morning was not a really good morning. Now this is Christmas Eve. Okay, and people always ask me, you look at, let me see if I can still pull up the CME's schedule. It's probably Christmas is probably already gone, but let me just take a look. Maybe they haven't changed it yet. Okay, good, it's still here. So there was actually trading on Wednesday. It was an early close, and then Friday was technically a full day of trading. But is there just because there's a full day of trading doesn't mean we want to trade that day. I mean, look what happened. Okay, nothing in pre-market at all. Okay, look at the volume. One contract traded hands at 4:50 in the morning. Okay, same thing, nothing. This is, and then, come here about 9:30, you get a little bit of a bump. People start to trade, and this is Christmas Eve, but it's just not, there's no trading here. And you could probably get some trend lines. You might pick up a winner or two, but what's going to happen? What are you going to see? You're going to see like a 50 or 60%. You're going to win more than you're going to lose, but is it enough to make money consistently? No. That's just not the way to trade. So, we really don't even look at that as a tradable day. And then Christmas Day, we were open for a couple hours, but that's just to get the continuity to the next day, okay? And then this is Friday, so this is Christmas Eve, and now here comes Friday, okay? And look at Friday, okay? Nothing in pre-market again, no contracts, no movement, okay? And this is a regular day. And then you just get that float up, okay? It's just, there's just a bunch of people that are sitting around bored, and, they buy a contract or two, and, not enough volume to really, get any kind of back and forth movement. Now, if you threw some trend lines in here, well, let's just look at the EMA. You had an EMA here, would have been a winner, near miss. No idea where the horizontal resistance lines would be, but chances are they'd all be stuffed down in here, because there was no push, no movement. At the very end of the day, you have another EMA that won there, possibly. There might be it doesn't even look like we have, double bottom flag right here. Maybe. Not much. And the trend lines, there doesn't even look like there's any trend lines. You can kind of see them. They just go off. You might have one here. Who knows? But you know what? Look at this. So here's a pretty clear high. That would have been a winner right there. That would have been a winner. So you would have picked up a few. You could have probably picked up a few trend lines, but you don't want to trade on a day like that. That was Friday, okay? That was Friday. There's just nothing going on to consider trading. The volume is so light. Where's the? Here we are, right here, 26th. Okay, 61,000 contracts. Would never risk it. Never risk trading on a day like that. Okay, so that's Friday. So let's talk about our what we're looking at today versus last week. Well, the weekly high is up here. Okay, and that was after this long float up on Friday. That's also yesterday's high, and yesterday's low is down here. Well, can you trust those numbers? Can you trust the close? And that's the problem you run into the next day after a day like this, okay? The next day, you have to use those horizontal numbers to trade off of. Well, they don't really give you a lot of support and resistance because they weren't really real numbers. We weren't really trading off of them on Friday. Friday, people were just, there was no traders in here. These were just some people that turned on their computer because they were bored and placed a couple trades. They probably didn't even know what they were doing. So do you think they're trading off of trend lines, off of horizontal resistance? No, they're just thinking that the market's going to go up or down, and they're taking positions based on that. They're gamblers. Okay, so that really discounts the horizontal resistance lines. That's why I wrote down here on this note, HR lines have no basis. Okay, there's no basis for the HR lines today because there wasn't really trading on Friday, and that's one thing that we see after holidays. Have to be very aware of that, okay? And, we're going to have the same thing this week. Not quite as bad because New Year's isn't quite as a universally, I guess it's a universally celebrated holiday, but it doesn't have the same, not everybody's going to shut their computer off. You're going to get people trading, okay? But I wouldn't think it's going to be very good, okay? And look at the volume. We're at 18,000 contracts. Already, not a lot of volume. Okay, so And let's take a look at what we have today. Okay, so horizontal resistance lines. Look, the first touch of the green line should have been a good trade. Yesterday's close, but it wasn't, because what was yesterday's close? You know, there's just kind of a failure here. It just kind of a little sell-off at the end. You know, remember, these people right here are buying in, you know, they're gambling that the price is going to go up because they usually see a float like that on a holiday, you know, when there's no trading. So they bought in, you know, rode this thing up, and then it got to here, okay, and look at the volume. Nothing. 200-300, okay, and it's getting close to closing time, right? And then all of a sudden it's like, uh-oh, we better get out. And we go from 900, okay, to 2,700 to 6,000. It's like a mad panic to get out, okay? All these people, and it's just like a rush, you know. So if you bought in anywhere up here, you probably lost down in here. You know, this is the big bar right at 16 at 4 o'clock. Okay, so that, you know, that's very easily spotted as a you know, a sell-off, end of the day sell-off. But where's the close? You know, does the close mean anything? No. It's just when all these people managed to get out of their contracts, this is where they were. You know, if the volume ended up being 80,000, the close might have been down here. You know, there's just no continuity is what the word that I like to use, but there's no basis for any of the support lines. And look what happened. We hit it and failed. Okay, here we hit it and it won, but we also had the EMA backing it up. And that's the only horizontal resistance lines we've hit. Okay, remember, the red and the blue don't mean anything until after 9 o'clock, or after 9:30, I'm sorry. Okay, so, you know, again, very difficult to trade on a day like this. Now, what has been working very, very well, okay, are the double tops and double bottoms. I mean, they're all over the place, you know. The trend lines have been, you know, a little shaky and few and far between. I mean, I haven't really been drawing a lot of trend lines. I drew this one down here, and it hit, and then it gave me another price failure just above it, and I drew that, and it hit, and it gave me 2, so, you know, that's okay. And I came up from here thinking we were going to kind of do something, but this was, you know, nothing. I mean, it actually just shortened up these two trades. Double bottom flag here. Here's an EMA right here. Let's finish up what's going on and see if we missed anything else here. 99. Okay, that's not a double bottom. Possibly a trend line down there, but it's really bordering the... And you know what? There's a couple new guys in here today. So, oh, hey, Mark, you got in. Okay, good. Good. I'll go over the trades and talk a little bit about it, but maybe we'll spend a little time teaching this morning because, like I said, you know, it's not going to be a great trading day. You know, today's not a day that you want to be really messing around here. Okay, you know, you can sim trade and, you know, play around that way, but oh, you tried to get in on your tablet. Yeah, you know what? If you're using a tablet, I know it works, but there's an app you have to download first. You know, so if you don't have the app, I think sometimes you click on it, it just takes you right to the app stores and downloads. But I guess it depends what kind of tablet you have. And then there's kind of limited use. It's very difficult to type on it on the tablet because you can't see the screen. But it can be done. I mean, I have some people that are here every day on iPads. It can be done. It can be done. Okay, so we have that short. Just looking to see if there's anything else. 3, 4, 7, no. possible trend line coming down. There's actually a double bottom flag here that just went to target. Okay, so now you can see it was right here. We got in at 150. It only went down to 98.75, so it's still a valid trade in here. We didn't have anything reversing us, and then it goes to target up here. So that's there. This is a 10-minute price failure. At 9:30, we're only three. Okay, so here's an example of crowding. Okay, and let's talk a little bit about this. So we're still in this EMA short at 275 short, and that's really it. I don't see anything else. So you look at this trend line, and that's a valid trend line, and the blue line is not tradable at this point. Okay, so your question is, we're 40 minutes before the open, and are we going to come down and hit this? There's a good chance we could come down and test this. So I would say that you could use that there. Now, if we were 5 minutes off the open, I'd be real careful, because look what happens when we hit the open. Then we're 4 ticks below the blue line. Then we have 2 targets. And so let me give everybody a background. I guess it's a good enough time to start into a little bit about what we're doing and how we're trading. And if anybody has questions, stop me along the way. More than welcome to type in questions, or if you need the microphone, let me know. You can use the microphone and speak your questions. Okay, so now we're 2 ticks positive on that EMA short. Okay, so we have a group of trades we trade off of. There are 4 trades, and we have some negative indicators that we use to keep us out of trades. 3 negative indicators, 4 trades, 3 negative indicators. There's you'll see green and red arrows. Green and red arrows are entries. They mark entries where they intersect with a horizontal line, or an EMA or another indicator that we might trade off of. Okay, for example, right here where we intersect with this orange line, that's the EMA. Okay, that would be a short trade. Okay, so that's an EMA short. That's one of our trades. And right here we have this red arrow pointing down. That's a trend line short, and here's another trend line short, and here's a trend line long. This is a double bottom flag. That's a little bit more of a complex trade. There's a bunch of little pieces that go into it. We can talk a little bit about these a little later. Double bottom flags, EMAs, horizontal resistance. That's these long lines going across. There's 7 of them, and that's what we were talking about a little earlier. There's not a lot of continuity between the horizontal resistance lines because they're based off of yesterday's and prior days numbers. And if we don't have any, or if it wasn't a real good trading day because of a holiday or a short abbreviated day, they're not going to be very valid. So that's what you're seeing today. But we're not really hitting that many of them, so it doesn't matter. So horizontal resistance trades, EMA, trend lines, and the double top, double bottom. Those are the 4 trades that we trade off of. And we have something called negative indicators. That's the little blue dots. Okay, those are called near misses. There's something called the 5-bar rule, and then there's the 5-point rule. We'll talk a little bit more about those as we go on. The red X is the loser. That's the only loser we've had this morning. So it's been a pretty good day so far. But again, just because it turns out to be good doesn't mean it's an ideal trading day. And what I do is I know that the holidays and the days before and the days after holidays are not good trading days, and I don't trade them. I mean, we're just sitting here now. Look, the timer's not even moving. You know, what does that mean? That means that there's nothing been traded. Now there it goes. So 10, 15 seconds into the new bar, we get a trade. Not enough volume. There's not enough volume. Okay, so how we usually structure for the new people, how we usually structure this is the morning groups, which we're in now, are more about when to trade. You know, we follow the price, and we look for the trades. We try and call them out real time and talk about them a little bit as they go. You know, and that's a typical morning session. You know, we do a little bit of teaching, and today's going to be a little special, obviously, because of the holiday session. But we do a little bit of teaching, and we do a lot more trading. And then usually 1 or 2 days a week in the afternoon, we do a class. And in the classes, we specifically focus on the trades and the negative indicators. We talk about them. We go over them. We look at slides. You know, we're not so worried about what's actually happening in the market. And those are the afternoon classes. We won't have an afternoon class this week. We're only going to trade today and tomorrow, and I think we'll probably cut short today at about 10 o'clock or so. I don't think I'm going to go to 11. It's, you know, it's just going to be too slow. And then we'll do the same thing tomorrow. You know, we'll shorten up. I'll leave my charts up, and you know, we'll run through that. I have a few things I'm going to probably do, so I might not be here all afternoon. But everything will be up. You can log in. You guys can talk, or, you know, see what's going on. And again, if anybody has any questions, you're more than welcome to spit those questions out any way you want. Okay, so let's talk about the negative indicators a little bit more. So there's 3 negative indicators. The reason I call them negative indicators is because they're kind of like trades in a way, especially the near miss, okay, or they signify something about a trade. But the basic thing about them is they tell you not to trade, okay, or they pull you out of a trade the same way another trade might reverse you. That's why we call them negative indicators, because they're kind of negative. You'll find that, you know, if one happens, if one comes along, it might knock you out of a trade with only 2 ticks profit, or it might even pull you out at a little bit of a loss. Okay, and if it does that, you know, is that bad? Well, you know, it's about consistency. It's about following the rules, and if it does every once in a while, that's what happens. Okay, this is a loser. Okay, the EMA just lost. Didn't really even have a chance. Okay, we just came up, we hit it. Okay, so we're trading a 5-minute chart. Okay, these are 5-minute bars, and we're trading the NQ. It's an E-mini. Okay, the E-minis. One of the reasons we trade the. Hang on one second. Who? Let me just see who that is that just came in. Oh, okay, that's it. One of the reasons we trade the E-minis are that they're movements all day long, and they move a lot. Okay, so if I was to pull a gold chart up or an oil chart, it would probably look something like this. Okay, and you know, they're very, very slow. Now, granted, you know, they can move 1 tick, and you can make $500 or $1,000. Okay, you know, and on 2 contracts, we do a we have a live room. Well, it's not really a room, but it's a signal room that Chuck runs, and he does a lot of commodities trading in there, and it's a whole different methodology. I mean, one of the biggest things that people ask me is like, well, what's the drawdown? And if you don't know what the drawdown is how much you can stand to go in the hole before you jump out of the trade. And the drawdown when you're trading oil and gas and soybeans, it could be a couple $1,000s. When you trade the way we trade on the E-minis, especially on the NASDAQ, the NQ is what we're trading, okay, we only risk $60. Okay, it's a $60 risk per trade, which is really good for people that are starting out. A lot of people that are getting into trading don't really understand a lot about it, and to think about putting $5,000 on the table and losing it all, you make mistakes and you tend to not follow rules. Well, one of the most important things about trading futures is trading based on rules. Okay, you'll never make money if you just arbitrarily gamble or bet long or short. It doesn't work. You'll always get beat out. You'll get stopped out. You'll get drawn down. So the E-minis are ideal for people that are just starting out trading because the risk is much lower. Okay, you're not going to lose $2,000, $3,000, $4,000 in a trade. In fact, like I said, it's $60 a trade is what we risk on. So you could I guess use the analogy they're like the penny slot machines. And I hate to do that because I don't really consider trading as gambling. Okay, I don't think what we're doing is gambling here, and I think if you consider it gambling, you're going to lose. Okay, if you try and bet on which way things are going to go based on intuition, you're going to lose. So, as far as your questions, again, asset class would be what we're trading, and that is we're trading the NASDAQ, the NQ. It's an E-mini. It's a equity index, actually, so it's composed of the NASDAQ 100 stocks. And we can trade it almost 24 hours a day. It's not real good at 2 in the morning or midnight or 10 o'clock at night. It's ideal from 3 a.m. to 4 p.m. Those are the best trading hours for the E-minis. They seem to all be about the same. They move very similar. The big ones that you might have heard of are the S&P. There's the Dow. There's the Russell, the NQ, the NASDAQ. One of the things, a lot of people say, oh, yeah, I heard about the E-minis. I want to get into the S&P because that's the big one, right? That's the one that everybody heard about. Well, to give you an example of risk-reward, okay, every time this thing ticks, moves in between one of these gray lines, it's a $5 real value movement, which means you can win or lose $5 on one contract. If you're trading 10 contracts, it's $50. Okay, obviously, the more contracts you trade, the more that changes. But that's a $5 move. So right now we're at $4,305, and if it ticks down, you can see on the right-hand side there's a price in black right here, and as it ticks down, okay, we lose or gain $5 per contract. Now it just made $5 if you're in a long position. Now if you're trading the S&P, all of a sudden instead of $5, it's $12.50, 2.5 times the value. Okay, and you're saying to yourself, well, that's still not a lot of money, and it really isn't. When you look at other things that move even faster and have much more value, but the difference is that trading value per trade. So if we were trading on the S&P right now, instead of risking $60 a trade, okay, you'd be somewhere around $180 a trade, or $120 and $30, $150 a trade with the same ratios. So, if you lose 2 or 3 trades in a row on the S&P, you've lost $500. If you lose 2 or 3 trades in a row on the NASDAQ, you only lost $120 to $180. See the difference? So, and you know, it's a very, very low risk trading area. It's great for learning, and it's also really, really good for people who just want to, you know, make a living. You know, I mean, you're not going to get rich quick on this market, that's for sure. Okay, I can guarantee you that. But you know, you can make a few $100,000 a year if you're good and you're consistent. You know, $200,000 a year is not unrealistic. How long have I been trading? Okay, and the chart we're using a daily chart, a 5-minute chart. I'm sorry, you can see up in the top corner. Each bar is 5 minutes. So you know, these are actual hours here on the bottom of the chart. And I'll tell you a little bit about how long I've been trading. I've been trading probably 30 years on and off, okay? And, you know, probably like most people, I started out playing around, you know, buying and selling stocks, and, you know, then I traded options. They seemed like the next possible thing. And from there, you know, I started going into a little bit more, I guess, esoteric type of derivatives, and I kind of played with everything I could think of. And you know, through the years, you know, I ended up being an okay trader. I had a lot of knowledge, but I would say I could never really make a living at trading. Okay, and it was never my first career. It was always just something that I did and I enjoyed. You know, and I was always trying to learn more about it. And I think about 5 or 6 years ago, maybe even a little more now, I don't know, 5 years ago, I started learning about what I'm doing now. I actually took a class very similar to the class that I give now, and I was kind of fascinated because one of the things that I never really understood about trading was it's not guessing. Okay, it's not gambling. It's statistics. It's about probabilities and you know, odds. It's about, you have a system and trading that system over and over and over again. Okay, and working out the numbers to where they work for you. And it's about rules. So the person that taught me this really opened my eyes, and it kind of made it clear that I could trade anything as long as I stuck with a set of rules and honed those rules to the point where they made money and consistently traded the same way. Now, that's very, very difficult for most traders, because most people come in and, you know, they see the markets and they think they have like a little bit of an edge. Like you see the price going up and you're like, okay, it's going to go up, and you buy in. Okay, and then it turns around and goes down and knocks you out, you know, and instead of holding it until it continues to go up, you know, you flip around the other way and you end up just chasing price. And, you know, that's not how you trade, that's gambling. Okay, and I started to learn that that's not it. You know, it's the guy that taught me used a lot of metaphors in the casinos, you know, which I like using, although I don't consider trading gambling. It is for many people. Okay, and one of the things that I saw, or that he imparted on me, was that when you're trading, a good trader is not the player in the casino. The good trader is the casino, is the bank. You take the opposite position. And you're like, well, yeah, that's easy. How do you do that? Right? You know, the opposite position is let's just look at blackjack, because everybody's familiar with blackjack, or a lot of people are familiar with blackjack. Okay, blackjack is there's a set of rules that you play by, and I don't know the rules because I'm not a casino person, but I know that, you know, the dealer has to hit to a certain point, and then when they get to a certain point, they have to hold. You know, they have this firm set of rules that they have to play by. They have no choice, okay? And they're not actually playing for real money. It's not their money. It belongs to the owner of the casino. Okay, they're just flipping the cards and following the rules. Okay, and those rules, okay, I know this number, those rules make them 50% of the time win the game, okay? If they follow the rules and someone else follows the exact same set of rules, that means that it's a 50-50 bet. That means that you're going to win one and you're going to lose one. So you say to yourself, well, how does that work? Okay, well, number one, the house wins a little bit more than the player wins. Okay, so like on a $5 bet, the house, wins $5.50 and the player wins $4.50 when they win, something like that. It's just a little minute difference. So the house automatically has a little bit of advantage there, right? Okay, but what's the bigger advantage? Not that little few cents. The bigger advantage is that the players are playing for real money. Okay, and they have emotions involved. And they don't follow the rules. Okay, and that's the difference between a professional gambler that gets kicked out of the casino for cheating, okay, and the players, okay, and the bank. Now, the professional gambler can play the same exact set of rules perfectly and never concern himself with the money as the bank, and he still won't win. Why not? Because the odds are stacked a little bit in favor of the bank. Okay? So if he plays exactly the same, he gets like just a little bit under a tie. But then he's got a couple little tricks, counting cards and so on. And when he does that, the banks have the ability to put 6 decks in or 12 decks in, make it a little bit harder to count cards. But it's not that difficult. I've never done it, but I'm just saying that I don't think it's that hard to learn to count cards and to play by the rules. And people do it, and they get thrown out of the casinos. Okay, they say that's cheating. You're not allowed to do it. I don't know if it's cheating or not, but we won't get into that discussion. So you can see how the casinos have this advantage. Okay, they play by the rules. They're not really concerned about the money. Okay, it's not about the money for these dealers. It's just about following the rules. Okay, that's important, and that's one of the things that was imparted on me when I was learning to trade. Okay, is that you're not going to take the position of the player. You can't let the dollars throw you around. You can't let the psychology of trading beat you, and that's one of the hardest things for people to understand. So when you start to trade, you learn this set of rules. Okay, and I learned this set of rules, and I practice them, and I stick to them. I trade by the rules 100% of the time. I never vary. Okay, so, I'm sitting here looking at the market, and I'm like, oh, we broke up through the EMA. It's going to be an up day. I'm going to buy 5 contracts long and let it ride. And you know what happens? I let my emotions tell me that, the market was going to go up, and I got slammed, and it came back down, and I lost it. But if I just ignore that thought, and I just sit here and I wait for a trade that I know is going to set up, because we see a certain amount of them every single day, and I know the percentage of them is 80+%, I'm going to win. I don't think about the money. If I hit 2 or 3 losers in a row, that's fine. I know the next 6 or 7 trades are going to be winners. Maybe 8 or 9 trades are going to be winners. And same thing going the other way. Okay? If I hit 5 trades, 6, 7, 8 trades in a row, winners, I know there's some losers coming up. Okay? And I have goals. I have targets. Very, very clear targets that I trade for. Okay, and everybody learns that. They learn to set up targets, okay? You can't be greedy in this. It doesn't go forever. It's a numbers game. It's an 80% win ratio. Day in and day out. I can show you charts for years, okay? 80%. And you'll win 8 trades and you'll lose 2. Sometimes you lose 3 and then, you win 11 or 12 or 15. That's just how it goes. But it's a very easy numbers game to understand. It's hard to follow it. That's it. So as far as trading, I've been trading for, probably 30 years now. Okay, I've been trading this system this way pretty much exclusively for about 5 years now. I've been teaching for over 2 years. maybe even more than that, maybe over 3 years now. I started, like I said, I took this class from this guy, and then I started teaching his class for him. He could have time off, and I worked with him for a long time. And then I wanted to expand a little bit, and he actually would never pay me, but I just enjoyed teaching it. And then I said, well, I'm going to go start my own school. And that's what I did a couple years ago, a few years ago now. And, that's what I do. I teach people how to trade now. It's fun. And I kind of enjoy it. So that answers, I think, all your questions. George, good morning. And once again, for, anybody that wants to ask questions, you're more than welcome to type them in. Okay, or you can use your microphone if you have your microphone. You can talk. Open. We're kind of slow today. We're not going to see a lot because of the holiday. Volume is very light. We're coming into the open. I'm probably going to quit around 10. We'll just do a couple hours of just, general talking and so on. And let's see if we see anything else while I was talking here. This EMA lost. Nothing else. There's a possible trend line. From here we can't get up, okay? And let's talk a little bit about trend line rules. Okay, everything is rules based. Everything we do is rules based. There's nothing arbitrary. Okay? Sometimes you have a couple choices when you go to draw a trend line, but typically you can look at those choices and you can determine based on the rules which is the way to go. Like when I talked about drawing this trend line, I don't want to hit this trend line at the same time I hit the blue line. So I want this trend line to be clear if we're coming down here. Now, at this point, I thought we could easily come down here. Now, this could end up being a double entry. Now, is it going to kill me? No, but it's going to cut down on my target. What could happen is we could just meander off over here and never really go anywhere. And then at the open at 9:30 or 9:35 bar, that's what it'll be, right about here, we could hit the blue line, and that gives us a near miss on the trend line. So it's not ideal, but I was hoping we would come back down. That's about the closest you'll ever get to arbitrary, is these decisions like this. And it won't really make a difference in the overall trading. Okay, you won't see a big change going one way or going the other way. Okay, so there's another possible trend line from this price failure. Okay, we draw trend lines from these price failures, these highs or lows that are all by themselves. There's one right there and there's one right there, so going way off into the distance. This almost looks a little too steep. I don't think we'll hit this. Like I said from the other day, usually on a day like this, we just kind of float up, but we'll see. I mean, there might be enough volume to actually see some trading here. Okay. And from here, can you draw a trend line to that next price failure? Well, here's a price failure right here, and there's the next one right there. But what's the problem? Okay, you can't cut through candle bodies. We call this point A and this point B. We can't cut through candle bodies, so that's not a valid trend line. Okay, and this is technically a trend channel line going up here. Okay. Really nothing. Possible double top flag. Just be slow. We'll see what happens. Okay, so let's talk a little bit about the negative indicators. The three negative indicators that we use are we use what's called a near miss, the 5-bar rule, and the 5-point rule. So the ones that stand out that everybody sees are the blue dots. Those are the near misses. They're called near misses. And you know what? We can get into a little bit of near miss theory too. That's always fun. This is my daily chart. I don't need it. Okay, so this is a near miss right here, this blue dot. And what does a near miss mean? A near miss is when the price comes up within 5 ticks of an entry, no closer than 2 to that entry, and then turns around and goes back the other way 7. That's a near miss. Okay, so what it is, it's like an almost trade. It's like we came up, we almost hit the line, and then we come back down the other way. As opposed to this right here, this is an EMA short. Okay, this is a near miss off the EMA. See the 2 right there? This one almost hit the EMA and came back down the other way. So the criteria is within 5, no closer than 2, and then back the other way 7. That's a near miss. There's 3 of these negative indicators. This is, this is one of them. Okay, so that's a near miss. And what does that mean? Okay, everybody always says, what does that mean? We don't talk about theory every single day because the theory, if you're an experienced trader or if you're experienced trading this system or you understand a little bit about, what we're doing, then the theory is really, really cool. And if you're new, sometimes the theory is a little confusing. So, I tell people, you don't understand all this right away. It takes a little while to absorb. Usually the first couple weeks or the first week is just, overwhelming with the amount of information that we're going over. Okay. And, every day you get a little bit more. It just takes a little bit of patience and a little bit of time, and you learn a little bit more, and you start putting the pieces together, and these little light bulbs go off in your head. Okay, and you're like, oh, I understand that. So what's a near miss? So a near miss is always fun. Okay, and the reason is, okay, this is an EMA, so we're looking for an EMA short here. We're looking for the price to come up, hit the EMA, and then come back down. Okay, and we have an 8-tick target. We're looking for 8 ticks off that trade. Okay, and you can see right here, we came up, we hit it, we went through it a few ticks, and then we came down. So this is an EMA short. It was a winning trade. Okay, our stop loss is 12 ticks. If it goes 12 ticks through, it's a loser. If it goes 8 ticks back the other way before it loses, it's a winner. Okay, but this is the near miss. So what happened right here? Okay, we came up about 2.5 ticks from the EMA, and then boom, it turned around and went the other way. Okay, within 5, no closer than 2, and then back the other way 7. So what is this near miss? What does it mean? And one of the neat things about this system is the more you understand it, the more you see how all these pieces fit together so beautifully. They're just designed like this. I didn't design them. The guy that taught me didn't design it. It's just price action. It's been around forever. But as the price comes up, stops and turns around, okay, why is that saying that's a near miss? And what does that mean? Well, if we get 2 near misses, okay, 2 near misses, we wouldn't take a trade on this EMA right here. So if we had come up and gotten this near miss, and then we had gotten another near miss, and there's a specific amount of bars that we can see this near miss in before it resets itself, then we wouldn't have taken this EMA trade. So we didn't have that, but we had 1 near miss. And what is that? So this is so easy to show on an EMA. That's why I like to talk about it right here. So let's put another EMA on here. Okay, and let's do a 14-period EMA. Okay, let's try a 18 period EMA and see how that works. It's maybe about a 16. Okay, so if you had a 16 period EMA set, which anybody could have any period EMA they could be trading off of, okay, what happened right here? You actually got a trade. And what happened? The price went up, it hit something and turned around and went the other way. It just didn't hit something that we had on our chart. Okay, you can see this other little EMA that I threw on here. Okay, now I took it off. So it hit some invisible line and turned around and went the other way. Okay, EMA short, but we didn't get it, okay? And that's the theory that you're seeing here. You're seeing that there's other people trading off of almost identical system that we're trading off of, but just a little bit different. So you get different price movements. Okay, and that's what the near misses account for. They account for that, okay? And, you know, what does that mean? Well, you know, we expect the price to come up, and today's not a good day because we don't have a lot to show you. I can't show you 100 near misses, but right here, okay, we came down, we had a near miss off the green line, and then we bounced back up, boom, boom, okay? And if we see too many of those, if we see two of them in a row, or two of them right next to each other within 5 bars, we say that that trade's already happened, okay? And then when it comes down, we didn't take it. But in this case, we didn't. In this case, we only had one near miss on the green line, and then we had an entry. Okay, and then it failed. And same thing here. We had one near miss, and then we had an entry, and this one went to target. This was a winner. This was a loser. If we had had 2 near misses, let's just give you an example right here. If this had come down to here and then gone back up, that would have given us another near miss right here. Okay, then we would have had 2 near misses, and we would not have taken this short or this long off of horizontal resistance. The near misses would have saved us. Okay, and now that we're talking a little bit about the near misses, okay, let's talk about what goes with them. Okay, in fact, I'm going to bring up a slide. We'll do some slides today. We got the open coming up. We don't have any trend lines. No, nothing here. Possible right here, but let me see. That's, you know, that's a valid trend line. Would you draw that now? No. Okay, why? We don't have separation, okay? We're not going to have separation until the next bar. And what's the next bar? The open. You really want to put a trend line on there that you're going to hit at the open? No, because we don't trade that opening bar. Okay, we may not even get this, okay? It may not even be a drawable trend line if we lose separation here. But I know that opening bar is going to have high volatility, so I don't want to draw to something 2 ticks away from opening bar. That's ridiculous. Okay, so, you know, you don't put that on there. There's no reason to draw it. And what you'll see is it'll probably die off here anyway in a second. We'll cut right through this high. Okay, so let's get back to our slide. Okay, so here's the near miss right here. Yeah, let me move this over so we can watch it. See what happens to the open. Okay, we come up and we're within 3 ticks of this horizontal line, and then we come back the other way 7. That's a near miss. Okay, so now if we come up and hit this horizontal line again, straight up like this, okay, if one of these bars comes up, is that a trade? Is that a horizontal resistance short? Yes, it is. Okay, but let's say, for example, that right here, this came up and we had another near miss right here. Okay, we had 2 near misses. Okay, what does that tell us? Okay, 2 near misses. that kicks in what's called the 5-bar rule. And that means that after that second near miss, after this one, okay, we're assuming there's another invisible one back here that we can't see. This is the second near miss. We have to wait 5 bars before we can get another trade on horizontal resistance. That's called the 5-bar rule. Okay, that's the second of the negative indicators. That 5-bar rule. So we'd have to wait. Okay, so let me bring up the 5-bar rule. And here it is right here. So this is with the EMA. Okay, here we have a touch of the EMA. This is possibly an EMA short right here. Okay. Okay, we just had a trade off the horizontal resistance. Everybody see that right there? 5 ticks already, 6. Okay, it might have already gone to target. 125. Nope, there's 7, there's 8. Okay, that's a winner. Just so everybody saw that, that was a winner off of horizontal resistance. So yesterday's close held. That's good. That means that we're getting some little semblance of normalcy in the market, although the volume's still too light. Okay. So now let's look at this, real life. We just came up and hit this, okay? Now what kicks in? This 5-bar rule kicks in. Okay? Let me pull the near miss off and let me move this over just so I can mark this. Okay, so now we have a trade right here. Already went to target. Now what if we come up again and hit it? We don't take a trade. Okay, we have a possible EMA here. 1, 2, 3, 4, 5. Near miss. This is going to be 2 near misses. Not quite. That's a near miss. And I'm wondering if we might have had 2 already. I was just looking at my tick chart trying to determine, and I think we had 2. I'm going to mark it as 2 near misses. I don't see any other way. It had to have come down here. Okay, okay, so now we've, like I said, we've come back up to the green line, but do we take a trade there? No, because that's the 5-bar rule. Okay, let's focus back on this. And, we get bounced around here because we're watching the price. It gets kind of exciting when we see the trades. We have a trend line. Here we go. That's going to be a near miss off the trend line. Let me mark this. Sorry, I keep trying to talk about the rules, and then one actually sets up in real life. It's more fun to watch it. Maybe not. I thought that would be a little too steep, but it looks like it's going to be okay. And here's a trend line right here. $14.75. Nope, that's 6 ticks. So we didn't get a second near miss, although it came really close. Okay, so we're still open above us. We have a trend line below us, no separation below us. Okay, so 5-bar rule. We came and we hit this. What we need is 5 clear bars before we can take another trade on this green line again. That's the 5-bar rule. And we're still on it. Okay, we had a trade right here. Okay, we had a trade right here just at the open. And we have to wait 5 clear bars. 5 bars that are not touching this green line, green horizontal line, before we can take another trade. So here it is on the EMA right here. We touched it right here. We had a short trade. We're still on it here, and then we start our count. 1, 2, 3, 4. And on the 5th bar, if we hit the EMA, we'd have a short trade. It's okay to trade. That's the 5-bar rule. Second of the negative indicators. 5-bar rule. It's a pretty easy rule. Okay. And look at it here. Let's talk about the theory behind that. I mean, there's not a lot of theory behind that when you think about it. Okay. If you didn't have the 5-bar rule, you would just keep trading every time you hit the green line, which doesn't make any sense. Okay. And we're coming up to this trend line now. Okay. We're going to be close enough for a near miss. 1750, 1575. Not quite a near miss. Watch for the near miss. This is going to be critical here. 1650. That's a near miss. We got our second one. Okay, so now what's happened? We've had 2 near misses on this trend line. Okay, so we cut the trend line off and we don't trade off of it anymore. Okay, the trading on this trend line is done. Okay, we don't have a trade on it. If it comes back up, it's over. So what did those near misses do? They kept us out of that trade. It stopped us from taking that trade. And how does this cut into that theory? Okay, how does it cut into that near miss theory? Well, you know, maybe your chart looks a little different. Maybe this candle didn't quite stop here. Everybody's charts could be different. Maybe yours looks something like this. Well, look at that. Then you had a hit. See that? One tick down here makes the difference between an entry or not an entry. So those near misses account for that. They account for people's charts that are just a little bit different. Okay, that little bit of difference keeps us in and out of trades. We don't want to make a trade that has already been done, that's already over. Okay, so 5-bar rule, near misses. Okay, we still can't start counting on the green line yet because we haven't been clear of it. We need to be completely off of it. So if we close up here where we are now, and then we move off 5 bars, and then we come down and hit it, we'd have a valid trade on the green line. So that's the 5-bar rule. That's the near miss. We're kind of, you know, bouncing in between these and seeing the trades setting up live, which is kind of good. We got a little bit of mix here. Okay, we have 50 seconds left in this bar, or a little less. And there's a couple scenarios setting up here. Okay? Couple scenarios setting up here. Okay, we have a possible double top flag and a possible trend line long. Okay, double top flag 1650. We've come down more than 5 points, and that's the 5-point rule. That's the last of the negative indicators. And what it says is, and we're going to get a double top, but we're also going to have a trend line right below us. This is going to be tricky. Okay, so there's a lot to explain here, so I'll have to break it down after the fact. Okay, that really looks like a double top flag. okay, to me. 856, and there's just 2 points, so not really enough room in here that I'd like to see to make money on this, okay? So the double top flag would be offset by the distance between the trend line, okay? Probably wouldn't take that, but the 5-point rule gave you the okay. That would be the first thing that you would look at. So let's break it down. We're not getting an entry anyway, so it doesn't really matter. The entry would have been down a tick below this, but let's talk about how they set up. Let's break it down piece by piece. Okay, so the first thing you're seeing right here is you're seeing a potential double top flag. Price failure high, prior price failure high. And then is this a flag? Okay, 850, 1650. It's 8 points. So as long as we're 8 ticks off the low or less, it's a flag. And where is it? It's 5 ticks off the low. Clearly a flag. Okay. Double top flag. All we need is an entry. Well, we didn't get an entry. The entry would have been 1 tick lower. Okay. The entry is, it could still happen, but the entry is down here. Okay. What's the problem though? Okay. 825, 850, 825. Profit is down here at 6. So it's just barely 2.5, 2.25 points. And at this time of the morning, okay, at 9:30, 9:45, these bars should be moving a lot more. So normally you would stay out of that double top flag because of its proximity to the trend line. The trend line is right below us. The EMA is done. Okay, we're not worrying about the EMA. Okay, it's got 2 near misses just like the trend line above us. But the double top flag, okay, would be your trade, or you have a long trade below it. But remember, opposing a double top flag, opposing any other trade, you want to make sure you have 2 to 3 points, at least enough to make money, which you do. But in the times of higher volume, when we have bigger bar movement, you want to have minimum of 3 points. You want to have 3 points or more, not minimum, just 3 points. 3 points or more, okay, on those double top flags as opposed when they're opposing another trade. Because what would happen is, in a scenario like this, you'd come down here 2 or 3 ticks below entry, you'd be in the trade, you'd get a potential near miss off the trend line, and then it goes back the other way, swings back 7 or 8 ticks and knocks you out at a loss, at a 3 or 4 tick loss. Not a lot of money, but it's still a loss. And that's what you see in that scenario. That's what we record over and over and over again so we don't take them. Okay, let's see. And then the other piece that we just saw here was the 5-point rule. Okay, there's something called 2 trades in the same direction. Okay, that would mean 2 short trades in a row without a long trade in between. Okay, we had a short trade here, okay, which went to target. And the rule is, this is the last of the negative indicators, okay. The rule is that if we go to take 2 trades in the same direction, before we can take 2 trades in the same direction, the first trade has to go 5 points, okay, to target, full 5 points, okay, which means that it would have to go straight down 5 points before we could take another trade in the same direction, or it would have to go to target and back to break even, okay. Or if it was a loser, it would be back to break even. So in this scenario, this one went to target, and then it came back to break even. It went down right here. We got our 8 ticks out of it, and then it came back up. So we could have taken another short trade. But because of the near miss, we treat these near misses, these things all interact together. It's important to understand that. The near misses, okay, as this comes down, this is like a trade, a short trade. So we need to come down 5 points. 1650. We came down to 850. We came down way more than 5 points. So that's a valid, it offset the 5-point rule because we came down 5 points. So that means that this is a valid double top flag, except because of this. Okay, I know that there's a couple new people in the room that are thoroughly confused. There's a couple of veterans here that are just laughing at how confusing it is. And, there's people that are just, the light bulbs are going off in your head. You're like, I get it now. So everybody's at a different stage. You're more than welcome to ask questions. We have plenty of time to talk about this stuff, to go over it. The trick is to mastering the system, mastering the rules. Anything you want to learn in life is going to have rules if it's going to work. It's not just random. Okay, so the double top flag, regardless of whether we got an entry, which we didn't, is done. Okay, we didn't get an entry, and now we have a possible trend line below us. Okay, so we have above us horizontal resistance, below us a trend line. Okay, 1, 2, 3 bars off the EMA. This was the second near miss right here. So remember the 5-bar rule. These things all kind of play in here. They all add up together. Okay, here was our last near miss right here off the EMA. 1, 2, 3. So 2 more bars and we can get an EMA long. And we have a trend line that's valid. So that's what we have. No volume, 35,000 contracts. Really, really light. Okay. We had 5,000 in the open, 7,000 next bar. Now we're down to 2,000. So we've doubled our volume in 3 bars right here. Okay, the trend line is our trade. Trend line long. Watch for the near miss. 775. That's a near miss or a potential. And there it is. There's our first near miss off the trend line. Very tentative. Things are not going to target. You're getting near misses. People are jumping in and out of trades early. They can't hold out. They know that it's not going to go. Questions? Anybody? Anybody? I know it's overwhelming. Don't be afraid to ask the wrong question. I'm not gonna embarrass anybody. I'm real patient. The class is about learning. It's all about learning. Okay, if we come down again, we could get a second near miss or we could get an entry. So not a great day today, because of the volume issues, because of the holidays. And, this whole week will be kind of shot, and Monday will be fine. The only thing Monday we might have to, well, Friday should be tradable, but, so we should get some horizontal resistance lines on Friday if we have some decent volume. And then Monday should be back to normal. New Year. Keep an eye out. Second near miss. I use a tick chart. I think everybody knows that, but I mean, this way I can see, here's the low right here. Okay, I can see it on there. So I can see, I know that's where I have to come down to again to get that second near miss. I keep this wide open on my other screen. 33 tick. Okay, so this near miss right here doesn't count for the EMA because the EMA is not tradable at this point. So 1, 2, 3. This is the fourth bar. One more bar and the EMA will be open back up again. So what we might be seeing right here is a near miss off of the trend line, but then the EMA opens up again on the next bar. Not a lot going on. A lot of back and forth, back and forth. Within 2, within 5, no closer than 2. So in this case, we were 5 ticks away. Okay, within 5, within 5, no closer than 2. So this was at 775, and the trend line. You know, sometimes you have to estimate these where they actually fall, but 650 is where I consider the cross on this. You know what? Maybe it was 625. It may not have been a near miss, but you know, I call it as a near miss. Now I'm looking at it a little closer. It looks like it was 6 ticks. But one of the things that you know you have to do, okay, is you have to make a call and stick with it. And I usually just look at, you know, it looks like a near miss to me. It came down, went back up. To me, that looks like a near miss. But, you know, if you examine these a little closer, sometimes you make a secondary decision. I usually don't change my calls. We're really slowing down for this time of the morning. Doesn't matter much anyway. Look, we're already down 1900, 1500. This would be my next choice of trend line. It's way early to draw it. Price failure high, right up here, coming down to the next price failure. Now, this is not a price failure yet. Could be. Same thing going up. Let's take a look at this. Coming from this point B, we have about 48 seconds left. Could come up here. What's the distance? Now, our next candle is going to be right about here at 950. That's close. It's 2.5 points. And you know what? We're moving so slow, it's tempting to draw that. But, you know, we could easily just break out of this. I mean, this is not the norm at this time of morning, and everybody should know that. Everybody should know, you know, if you're here enough, you know that this is the most volatile time, and this is when we see, you know, big movement. So I wouldn't risk that trend line. I would just stick with what we got. Couple seconds left. Okay, way early on this. Now we have separation, okay, but will we maintain separation? That's the question. Still have the trend line below us open. 1, 2, 3, 4, 5. So now we're 5 bars off the EMA. So we have 2 possible targets down here, but they're right on top of each other. EMA and horizontal reserve and trend line below us. Still, we're open on the trend line above us. It's still a possibility. More than 2.5 minutes. Not going anywhere. 19, 21, 13. Okay, let's talk a little bit about, while we're sitting here waiting, this week's schedule quickly. This is the New Year's. Regular close on Wednesday, okay? We're going to trade tomorrow, but it's going to be an abbreviated day just like today. It's not going to be great. We're just going to, kind of talk and learn a little bit. I don't expect that it's going to be a good trading day. You may see a little bit in the afternoon, maybe not. It's hard to tell. Here we come down to the EMA and horizontal resistance. No, not quite. Wednesday, I'm not going to even open up the room. Okay, I'll be available for phone calls and, I'll be around. And same with Friday. Okay, Friday's a regular trading day, but it's going to be too slow. Too many people, not trading. It's just not really going to be ideal. And your best bet is just to, not even try. Okay, and then Monday we'll come back and everything will be normal. Hopefully. So tomorrow we'll do like today. Okay, so look, we just lost separation on this upper trend line. Okay, so right now we pull this off. Okay, it's no good. It's not usable. And really, this is a 10-minute price failure. So this is one of the things, when you're drawing these things real early, you have to kind of constantly move them. That's where you would draw to now. And if it comes up anymore, you're going to have to keep moving it. So nothing here. This trend line is way early. We're still open below us. We have one near miss on the trend line, and the EMA is wide open. This EMA got pulled up here, so we did not have a near miss on it. And we can look at this. Just want to be careful that it doesn't get drawn out too far. Let's shrink this up a little bit. trend line and the EMA are almost at the same point. It's close enough for a near miss on the EMA. We're within 5. Now if we come up 7, we have a near miss. It's up 4. Now we're close enough for a near miss on both. Potential near miss on both. So that could be the second near miss on the trend line, or we could get an entry. $8.50. There's early entry on the EMA. Target's based off 775. It's also a near miss. Okay, so 775. $9.50 is target. Didn't quite make it. Couple more ticks. Cat says it's going to go. There's 7. Nope. Not quite. Only went up 6. 6 twice. It would be, let's watch the trade and then I'll explain it. It's going to be the second near miss on the trend line. And there's target, okay, on the EMA. So what you have is this right here. Okay, so what we had is first near miss as the 6 bar. Okay, so with trend lines, there's no bar count. 2, 3, 4. It doesn't really matter. Okay, so we had 2 near misses on the trend line, so that deactivates the trend line. The trend line's no longer tradable. The EMA, here was the last touch of the EMA right here. Okay, and then we had 1, 2, 3, 4, and this is the 5th bar. And then on the 6th bar, we came down and we were 1 tick away, which is called an early entry. Okay, and it touched it and it went up and went to target. Okay, and at the same time, it gave us the near miss off the trend line. So the trend line is done, and the EMA goes to target. The EMA is a full winner. Does that explain it? Or no? It would have been the first near miss on the EMA, correct? I guess if we were counting that, because there was no other near misses on the EMA. I'm not sure if I got your question or not, but if you restate it, or you can always use the microphone. I can always hear you. Right, the EMA, because, okay, the trend line is deactivated. Okay, these two near misses are from the EMA right here. Okay, and then you have to count 5 bars before you ever even use the EMA again. So 1, 2, 3. This would be like a near miss on the EMA, but it's not because of the 5-bar rule. So you don't even see the EMA here. You pretend like it's not here. And then when we finally get to it here, we're 5 bars off and we start again. But yes, I think you got it. I think you are stating correctly. And the trend line above us is still not active because we need separation. It will be in 34 seconds. $20 seconds. Point A, point B, and we need 1 bar with separation, and we have it. So now we have an active EMA above, or an active trend line above us. Still no trade off the green line. You see, we've never gotten off of it. Volume's up to, we've got about 46,000 contracts, which is pretty light, and it lightens up a lot in the afternoon. Okay, you got to remember that, whatever we have in the morning, it's lighter in the afternoon. Okay, might be too light, although, if it smooths out, and we might have a period of time, but I wouldn't, today wouldn't be a day I'd be trading. $9.35 to $9.50 was not a trend line. $9.35. That's what I was just talking about. I was like, it was a little close, and I didn't want to bring it up because there was too much. I drew it. I don't know if you were here or not, but I just thought it was a little too close to this lower trend line. The EMA was right there. Everything was kind of bunched up, and I just didn't draw it for that reason, crowding. You always hear me say that, crowding. I don't want to crowd things. I was figuring that, this time of morning, if it was pre-market or late in the afternoon, but this is kind of, it's hard to trade now because at 9:30 to 10 o'clock in the morning, you expect a lot of movement. We expect bigger bars, and we're not seeing it, but that doesn't mean it couldn't switch. Doesn't mean that any moment now it couldn't just fly up or fly down. Trend line above us, short on the trend line. $13.75 is our entry. That's close enough for a near miss. That's a near miss. Okay, so there's our first near miss. And, when it gets like this is what you see, a lot of near misses. See a lot of near misses in this type of trading, a day like this. I'm probably going to wrap it up soon. Like I said, it's been pretty slow, and I wouldn't expect it to be much different. If anything, this afternoon might get a little bit better as it just smooths out. I mean, we might just hang on horizontal line here, but you got to be careful. I mean, anything goes on a day like this. Let's just see where this trade goes. We could get a second near miss right here. See, I can see this pretty well in my tick chart. I'll just bring it over. You can see where it came up twice up here. First near miss, and we're in the midst of the second near miss. 12.75. If it comes down to 11, it's going to be a second near miss. Or we could get an entry. The entry now is a little bit lower. 13.50. Maybe even 13.25. $11 is the second near miss. It'll be done. We won't get a trade off it again. Okay, so that's the second near miss. So now that's it. Okay. Well, I'm going to wrap it up. There's nothing. Now we don't even have a trend line above us. You could come down from this point B to here, maybe. No trend line below us. I mean, everything's pretty much shot now until we move off the EMA. Another two more bars. So, we're going to have 10, 15, 20 minutes before we get another trade. And then we may not even have one there. It's like I said, it's really slowing down. So, if you're going to stick around and I'm here, I'll update. If I'm out, I won't be able to. you can do that. Tomorrow we're going to do the same thing, kind of a combination group class, just because of the slowness. We won't really see a lot, and then we'll be back on Monday again. So thanks for coming by, and sorry we didn't get a lot more trades. Usually we see a lot more by this time, but it's been a good morning. Just 2 losers, and I think we probably had close to 15 or so winners, maybe even 20. Just to recap, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 trades and 2 losers. So numbers-wise, they've been okay, but it's just not good quality trading, and you're more at a high risk type of thing in a day like this. Okay, well, thanks again for coming by. I will see everybody tomorrow, and have a good day. See you, George.